Hey guys, so in last week's lesson, I talked about the major pitfalls to look at when you're considering a mortgage forbearance. Had a lot of questions and a lot of feedback on that. So in today's lesson, I wanted to do a little bit of a continuation, and I want to talk about the most important factor that you need to look at if you are considering a mortgage forbearance. Hi, it's Robert Weinberg, and on this channel we empower people to take control of their future through expert mortgage and financial strategies. In this lesson, we're going to talk about the most important factor you need to consider if you're considering a mortgage forbearance. And what is that important factor? It is where will your deferred payments go? So on a mortgage forbearance, it's going to allow you to quote-unquote waive or defer your mortgage payments for a certain period of time, whether that be 2 or 3 months, 6 months, or even 12 months, as some of the mortgage services have come out and said. But you need to know where those payments are going to go, because the majority of the time, as we talked about in last week's lesson, is that these payments are due all at one time. So if you have a $2,000 a month mortgage and you get a 3-month forbearance, in month 4, you're going to owe 4 months of mortgage payments. So at $2,000 a month, you're going to owe $8,000 at one time. If you just had a job loss or if you just had a reduction in income, you're not going to be able to make an $8,000 lump sum mortgage payment at one time. Whether it's that amount or whether it's $5,000 or $6,000, it's going to be a large amount of money that you're going to owe, and a lot of people don't realize that this is coming. This is going to put you in an even worse spot than you were before. Now, in an ideal situation, and what some of the servicers are doing, is that they're going to allow you to add that to the back end of the loan. So they're just going to tack that extra money on from those missed payments to your balance. And then when you refinance your home or you sell your property, it'll just be due upon that sale or refinance. No big deal. But again, that's the minority of the scenarios that I've seen. The other thing that I've seen as an option is the mortgage company will amortize that payment over 12 months. So when we were talking about $8,000 in that example, over 12 months, that's $666.67. So if your payment is currently $2,000 a month, and you end up with that scenario, your payment's going to go up from $2,000 a month to $2,666.67. Again, if you just came off a job loss or a reduction in income, you're going to say, well, that doesn't really help me. But unfortunately, that's what's coming for people that do these forbearances, don't know what they're getting into, and don't read the fine print. So in those scenarios, what's going to happen is you're going to be forced to do a loan modification. You can refer back to last week's videos for all the ramifications of what a loan modification might do. But the big thing I want to concentrate on here is that the loan modification is going to take it so that your payment won't go up as much. And you might say, okay, well, that's not bad then. Number one, there's credit implications most of the time for that. More importantly, if you have, let's say, 28 years left on a 30-year mortgage, how are they going to keep your payment the same if they're going to add all this money to the back end of the loan? Well, how they do that is they re-amortize your loan. And I've seen people who do these loan modifications where they stretch the loan out from, say, 28 years out to 40 years. That's 40 years. And even in some extreme circumstances, I've seen mortgage servicers take that payment all the way out to a 50-year mortgage. So you want to talk about really getting screwed and doing more harm than good. That's why we're really not recommending these forbearances unless you have absolutely no other option whatsoever. Now, something that's happened in the last week is a lot of the mortgage servicing companies have come out and said that your credit should not be affected by taking advantage of these forbearances. But you need to realize you may still not be able to get a new mortgage, even if you have excellent credit, for a couple different reasons. Number one is that it will typically show a dash on your credit report for the months that you didn't have those payments being made. So when you go to get a new mortgage and the underwriter sees that, especially if it's in the last 12 to 18 months, they're going to say, we need a payment history on that mortgage. Well, if the payment history comes back and shows that you had several months of payments not being made, you're not going to be eligible for most mortgage programs. Even if your credit doesn't report that it's had those type of forbearance issues or the dashes on the payment history, when a mortgage payoff statement comes back, which is going to be required, especially when refinancing, it's going to show as a line item on that mortgage payoff statement that there's these excess payments that are owed. So the underwriter will know and will see that you had a forbearance done. And again, in most loan programs, that's going to make you ineligible. So it's not only the short term, but it's these long-term repercussions that could come back to haunt you in a couple years down the line when you go to try to refinance or buy a new home. So even if you have excellent credit and they don't report it as a negative or a derogatory on your credit, these are certain things that you need to be aware of that could come up and impact your ability to get a new loan. So you really only want to use this forbearance option as an absolute last resort. Now, I've seen politicians and newscasters and people online talking about that this is a free-for-all. These are basically a handout. Anyone that's got a mortgage, go ahead and take advantage of these forbearance programs, and that is the worst thing that you could do. If you have a job, if you are able to make ends meet, if you are able to pay your mortgage payment, absolutely go on like nothing happened, move forward, continue paying your mortgage. The reason why is because we're already seeing, just in the last few weeks, since these forbearance programs have been announced, there's been a huge negative impact to the value of a mortgage. Now, a mortgage is a product like any other, and there's a value to that product. And the value that that product has impacts everyone else that's manufacturing that product, like loan originators, mortgage servicers, and other people involved in the process. So we've seen mortgage servicing values have gone down dramatically over the last few weeks. And you may say, well, what does that matter to me as a consumer, as a homeowner? Well, here's why it matters. They've increased minimum credit scores on almost every loan program in the last couple weeks. Mortgage products that were available a few weeks ago are no longer available now because there's no market for them. There's no value for those anymore, specifically because of these forbearance programs and how costly that they're going to be to mortgage servicers. The other thing is mortgage pricing and interest rates, they're not as low as they should be, okay? Right now, 30-year mortgage rates should be in the low 3s to high 2s, but they're not in most cases. Why are they not? Because the value of a mortgage has gone down because there's so much uncertainty on what type of toll is these forbearance programs going to take. What type of profit are the mortgage servicing companies going to have to plow back in to making sure that they can stay in business, to make sure that their investors can stay whole. So you do not want to be somebody that takes advantage of these programs when you don't absolutely need to, because you're just magnifying this problem. You're making mortgages more expensive, and also fees are going up on mortgages. Whereas before, it wasn't very common to pay points. Now on a lot of loan programs, you have to pay points just to get a mortgage right now because, again, these values have dropped. The servicing has dropped. So I hope that this gives you some good insight on forbearances and the important factor you need to consider if you're looking at it, this is a potential option for you. If it's your first time watching, please go ahead and hit the subscribe button. Also click the bell so you get notified on all of our future content. If I can be of assistance to you or anyone you know, please go ahead and call or text my office directly. I appreciate you watching, and take care.